Time now for business, and we say hello to Kate Moody.
Hi, Francois.
We begin with the European Central Bank. You could say following the nod of the U.S. Federal Reserve. It's a record rate hike.
Yeah, as you say, matching the pace of the last two rate hikes that we've seen from the U.S. Central Bank. The Eurozone had negative interest rates for over a decade. The ECB only brought its key deposit rate to 0 in July. Today's move of 0.75 of 1 percentage point now brings that rate just there to 0.75% there. Policymakers had been debating whether to move by 50 or 75 basis points. This larger hike underscoring the scale of the challenge being faced by policymakers. Inflation in the Eurozone hit 9.1% in August. That is the highest on record for the bloc. The Eurozone's largest economy, Germany, just under the average there. France, significantly lower, 6.6% inflation on the harmonized index. Double-digit inflation in countries including Spain, Italy, Greece, and the Netherlands. Estonia has the highest inflation in the Eurozone. Prices in August 25% higher than they were a year earlier. The ECB is now forecasting inflation to settle at about 8.8% for 2022 as a whole. That is a long way from its target of 2%. Well, for more, let's cross over to Craig Erlam, Senior Market Analyst at Oanda. Thanks for being with us again. From a market's point of view, first of all, is this move going to ease the tensions that we've seen recently?
Perhaps. I think the problem that the ECB has is that it's moved so late in the day that it now has to be extremely aggressive. And it didn't really learn the lessons of other central banks. The Bank of England started moving late last year and even acknowledged as it went through this year that it may need to pick up the pace of tightening. The Federal Reserve started in February and then became far more aggressive as we turned into the spring. Other central banks were the same, yet the ECB continued to believe that its situation was different, and now that it's become clear that it isn't, it's having to move very aggressively at the worst possible time. We know the euro area economy is very fragile, and that's been the case for more than a decade now, but to be doing it at a time when gas prices are doing what they are just really compounds the situation. I think there will be some relief that we are seeing an appropriate amount of tightening for the inflation situation right now, but I think a lot more is going to be needed.
Concretely, how effective are these higher interest rates going to be in tackling the record high inflation that the Eurozone is dealing with at the moment?
It's not going to be as effective as you would ordinarily see because so much of it is driven by energy prices, and the central bank could raise interest rates 10% and it's not going to have an impact on fuel prices. That's just the fact of the matter. But the problem is it is how domestically driven it's becoming, and those are the areas that it can start to influence. So it can start to influence the supply and demand function. It can influence the ability of businesses to raise prices and consumers to pay them. And that's really what the central banks are now addressing. It's not the fact that it can control these external factors, but what it can do, and if we look at the last year, there's plenty of evidence of this, businesses have been far more willing to pass on price hikes to end consumers because they know they're able and willing to pay them, partially because of the pandemic and the excess savings that were built up during that period. This is the thing that the central banks do need to get a grip of, and this is why we're seeing rate rises, even if it can't address the majority of this imported inflation.
So what kind of tools are available to address the inflation?
The biggest tools that are available to address the underlying causes of headline inflation are more political than they are, or geopolitical than they are the monetary. So you look at, for example, the announcement that we've had here in the UK today, and that we've seen across Europe already, the price caps on any household energy and business energy prices. This is one area that you can address headline inflation. That should bring at least a few percentage points off UK inflation now, thanks to the announcements today. So that's one way you can address a headline inflation and then address inflation expectations, but also input costs for businesses and therefore end prices. This is one area that you can do, but you're kind of kicking the can down the road with those policies, because not only are you not then seeing the kind of demand destruction which could lead to more sustainably lower energy prices, but you are also mean that you're kind of driving higher domestic pressures at the expense of lower external pressures. So, I mean, it's all a balancing act right now. There is no easy, correct solution. There is the least bad solution, and that's what politicians around the world are currently trying to find.
And I do want to briefly ask you about that energy crisis in the UK, this long-awaited plan that's been unveiled by the new Prime Minister, Liz Truss. Is it what businesses, households, and investors had been hoping for?
Absolutely. I mean, I'm sure there's people who are still going to be looking at their energy bills and wondering how they're going to get by, but I think there's going to be a lot less people in that situation thanks to the announcements that we've had today, and I'm sure there's going to be many businesses that are relieved at the announcements that we've had today, and I think that's going to be really important. The Bank of England was previously forecasting 13.3% inflation peak later on this year and 5 consecutive quarters of recession and 2 consecutive years of negative growth, and that could have possibly been on the optimistic side, given that this came a good few weeks ago. We've seen some banks suggesting that inflation could have topped 20%. So the forecasts were only really heading in one direction. This should alleviate a significant portion of that pain and enable any recession to be more brief and short-lived and also less severe, So I do think this is an important policy decision today. But as we've seen throughout the pandemic, as an example, these big, bold policy decisions to alleviate suffering do tend to come at a cost.
Craig Erlam, thank you so much for your analysis here on France 24. And Francois, I do want to point out that the European markets, major European markets, had a very muted, rather mixed reaction to those policy announcements. Pound sterling, meanwhile, still hovering near its 37-year low.
All right, many thanks, Kate Moody, and we'll have more business news for you later.